Hey guys, this is Forte. The last video's audio was kind of messed up, so I'm gonna remake it. Not really remake, I will just go through the same thing I just did. And maybe go through a couple more examples on what kind of market that we're really in right now. If you take a look at the S&P right now, obviously we're at the beginning. Now, I'm not gonna say obviously we're at the beginning of a bull market, but the market is obviously doing better than 2022, right? And 2021. Well, probably not as good as 2021, but way better than 2022. 2022, we had a pretty major bear market. This bear market lasted to this date about 20 months. So we've gone through a lot of tough times. And now that the market is getting better and we're chopping our way up to the all-time high. And when this is all happening, what's happening behind the scene with the stock market is that stocks that has just good performance with fundamental and technical, they seem to be carry on with their profit and holding it much better than stocks with good technical and bad fundamentals. We can take a look at some examples, such as a good example I like to give is ELF. This stock has great fundamental, and this thing broke out and held its profit and is now up about 243%. And it's still going higher in my opinion. This thing is good. That's why I have a position in this stock, and I do plan on holding this thing for a little bit longer profit. And if you take a look at the weekly chart, we're doing pretty well because this week we had it wasn't this week, sorry, on the daily chart. Last week the stock pulled back quite a bit, but less than 5%. And on this pullback, the red bars, we had extremely low volume. Now that could be caused by the July 4th short market week. But it doesn't really matter because then we're pulling back on low volume. That's really all that matters at this point. It doesn't matter what kind of week it's causing that, but it's pulling back and it happened on low volume. So that goes on and tells me that it is not major selling from big institutions. And another stock is SMCI. This thing is a really recent breakout, and it broke out like crazy and it moved cleanly up into all-time high and moved about 160%, just 180% in like 6 weeks. And then we consolidated about 20%, a tiny bit more, which I wouldn't consider it as major selling. And the volume doesn't seem to be it doesn't seem to be bigger than the days that it went up. And it's as big, but not overly overwhelming the buyers. And now that it's done consolidating a little bit, now it's coming back up. If this thing can tighten up a little bit, or even if it doesn't, I plan on buying it anyways if it goes above 270 and 270 25 cents. If it does break up above that, I will definitely get a small position and probably have a really wide stop because this stock has not yet consolidated the way I want it. If I want the perfect consolidation, would be something like this, right? It tightens up a little bit more and then goes, but it can just go without doing that. So I'm going to buy a small position with a way wider stop. And now I'm going to show you guys some examples of stocks that has great technical but really poor fundamental. One of them is Wingstop. This stock set up pretty well, and we have consolidations here and there. The stock went up, came down, consolidated, came back down. A lot of price corrections and a tiny bit of tightening right here. And this thing broke up, and now we come back and we're retesting this area again. It's extremely slow. I don't see the point of putting your money in this. And that's because the company, the restaurant, Wingstop, is actually not profitable. And that's why I don't want to buy this thing, right? Another one is Duolingo, DUOL. This stock, if we looking at it hindsight, it's not that good. But if we cover it, we're kind of like putting in a lot of bottoms and then surging on extremely high volumes. If you take a look at the volume chart, and this thing surged about 120%, and it had a shakeout, consolidated. It looked really good, and there's overhead supply that is a problem. So technical, I will give it a 88 points out of 100, but it's still, regardless, a good stock to trade. But what happened is that the stock went up, it was short-lived, and came back, and now we're right back at the consolidating area again. This goes to show that stocks with good technical and bad or average fundamental doesn't seem to be holding too well. And the two stocks that have great fundamental and great fundamental and technical is ELF and SMCI. So that's the type of market that we're in. So you should really be really picky and not over trading, because over trading in this market, I think, will be disastrous. If you take a look at the QQQ, if you're swing trading a lot, what happens is that you're likely shaken out of your position on last Friday. Yeah, the index didn't move too much, but a lot of stock have corrected for like 5, 8, 9% in last Friday, and that's enough to shake a lot of the swing traders out, because swing traders tend to have a lot of tighter stop. That's a lot of my swing positions got shaken out. I protected really well with the profit, but it's not really the profit from my swing trading this year is not it's not good. It's not formidable. It's not enough to justify the amount of risk I am taking. But the stocks I am getting great returns are the stocks with great fundamentals and great technicals, such as the ELF and the SMCI. And these are the two stocks that I think will continue and go up and make greater gains. So do keep these two on your watch list all the time. And we have yet to see any small caps setting up. The one that I did a couple months ago, it's not setting up. It failed because the fundamental wasn't great. It had an okay technical. If you take a look at the weekly chart, if we cover right here, right, the stock tightened up and we're about to break into all-time high. And what it did is that it never ever touched that high. It kind of just died. And that's due to the fact that the stock has poor sales, poor earnings per share, and the fundamental isn't great. And that's pretty much it for this week. And if you guys like the video, please comment, subscribe, subscribe to the YouTube channel. Follow me on Twitter at twitter.com/fortecharts if you want. And I think in my last couple of videos, people asked me if, not in my last couple of videos, but my older videos, people asked me if they can get any benefits out of joining the membership of this YouTube channel. You cannot, or you can join the YouTube channel and become a member if you want, but I don't have any benefits I can give you. I stopped doing that for a long time. And the reason due to that is obviously due to the fact that I don't want to be the guy that sells course and sells stuff on YouTube. I'm just doing this for fun, which means that this entire video is solely personal opinion. It's not financial advice. Please read the description of this YouTube channel. And that's it. Thank you guys for watching. We're about to hit 7,000 subscribers. Thank you guys for watching my videos and enjoying this journey along with me. Let's go and let's become rich. Let's go.